Hello, everyone, and welcome. My name is Nicola Corzine, and I am the founding executive director of the NASDAQ Entrepreneurial Center. We're delighted to have you joining us today for this really critical discussion on PPP. Now, for those of you who may not know us, the NASDAQ Center is a nonprofit dedicated to enabling entrepreneurs like yourselves to thrive and make amazing things happen and realize their maximum potential and grow. As you may have seen in our chat, the NASDAQ Center, along with our partner Mentor Cloud, is launching a free mentor matching platform for entrepreneurs, and it's called Mentor Makers. We have helped you create an advisory board that can guide and inspire you within the moment responsive mentorship from topic experts and professionals dedicated to providing exceptional mentorship to our exceptional entrepreneurs. And just like everything that the center does, it's all pro bono. There's no cost, there's no expectations other than the hope that you continue to be and do amazing things in this very difficult and challenging time that we all find ourselves in. So we hope that you will find or become a mentor today by using that live chat that you'll see and that link in the chat today. We really do believe here that entrepreneurs are our doers. They are our visionaries who are not only solving our problems, but actually creating communities that make us all be so much more successful. And they're going to create a better future for all of us now more than ever. Mentorship matters to all entrepreneurs, and their success is truly dependent on it. So join us in this movement as we aim to ignite 1 million mentor hours by the end of this year for more than 50,000 businesses. Now, as a reminder, if this is your first time joining us, we do open up for live Q&A at the end of the session. So please go ahead and submit your questions in that Q&A function that you'll see at the bottom of your screen throughout the presentation today, and we'll try to get to just as many as we possibly can. Of course, a moment to pause and recognize that none of this work that we do would be possible without our amazing partners and sponsors who support and provide this opportunity for all of us to learn. So to our sponsors, NASDAQ, Lehigh University, Bank of the West, KPMG, Wilson Sonsini, Woodruff Sawyer, BPM, NZTE, and Microsoft for Startups, thank you. As you know, we're so inspired and humbled by your contributions and are incredibly grateful for all you do for us and for all that you do for our entrepreneurs. Now, during this difficult time, we're also been measuring how our entrepreneurs are faring. So if you'll indulge, we have a couple of polls that I'm going to be launching here momentarily, just to get a sense as to how you're all doing, as I say, in this very difficult time. The first one is a very easy one, and it's just going to ask you to reflect, how are you feeling? We've actually been measuring this since the start of COVID and the start of the pandemic. Obviously, understandably, our businesses have been challenged, our families have been challenged, our country, our nation, our globe has been challenged. And so we want to make sure that the classes, the programs, everything that we're providing to you is in support of your overall wellness and well-being. So I'm going to take just a moment to let as many of our hundreds that are joining us for this program today able to participate. Thank you for all of you that are doing this. I'm pleased to say that we are not seeing an uptick too much in the fearful category, though again, fully understand if you are feeling that way. It has been a very, very, very long winter, no pun intended. But right now we've got about 46% of you that are finding yourself in that surviving category, followed by about 30% that are optimistic. Not surprisingly, given that we are working with entrepreneurs here, we always see a very vibrant community of those that are hopeful, as are we, for a better, brighter future coming out of this very challenging time. So let me stop sharing on that one. And I've got one more poll that I'm going to ask you to reply to right now. And this is one of our most important ones. It actually asks you to reply to us, what's keeping you up at night? We have a whole host of categories that we're sharing right now. And again, if you're new to us and you may not know, this response will actually help our amazing program team at the center make sure that the workshops, the classes, the programs that we're building for you over the course of the next 10 to 12 weeks are hitting these issue areas that you're struggling. So if you tell us that you're worried mostly about finance or sales, we're going to make sure that we're going to go out and find the best and the brightest that can help you address some of those questions and some of those issues that you're facing. So again, probably not surprisingly, given the poll, given the session that we're all here joining on right now, finance and sales is definitely up in the top. And then again, a healthy dose of people that are just trying to survive in these times, probably looking at some of the things relating to pivots and other ways. So thank you so much for answering that. I'm going to share those results really quickly just so that you can all see. And you'll see us reflect on these, as I say, over the coming 10 to 12 weeks with new classes and new programs that the center will be providing. So without further ado, it is my absolute joy to be able to share with you today an amazing host of experts and panelists that are going to be addressing this very critical issue around PPP. So please join me in giving a very warm welcome to our panelists. We have Roxanne Burns, Senior Vice President of Small and Medium Enterprise at Bank of the West, joining us again for this topic. We have Jared Dace, Director at Deal Advisory and Strategy, Accounting Advisory at KPMG, and Brady Berg, our partner at Wilson Sonsini. Thank you guys so much for joining. If I can invite each of you to maybe share just a minute or two about your background and probably a little bit about some of the work that you have been facing around PPP in the last close to a year now. So Roxanne, let's start with you. Oh, I think you may still be on mute. I do that all the time, Rox, if you don't mind. Perfect.
There you go, right? Thanks. I have been with Bank of the West for about a year. So I started at the bank at the beginning of the pandemic and PPP. And I'm one of the business leaders on the PPP program for Bank of the West. And I have about 30 years of SBA lending experience. So this is a very unique SBA program, nothing like the regular SBA programs. So it's been quite a ride to learn and be part of the PPP experience.
Amazing. We're so grateful to have you here. And what a year that has been at Bank of the West. Your leadership is so appreciated, though I know by so many thousands of entrepreneurs at this time. Great to have you joining us again. Thank you. Jared, over to you. Oh, we got that mute thing happening again. Sorry.
Jared Tice. I'm a director in our accounting advisory practice, the deal advisory and strategy practice for KPMG. I have been with the firm for over 12 years, but at the start of when the CARES Act was enacted last March, I volunteered for a national team and was assigned the SBA PPP loans. And so been pretty much integrated with that process for the whole trip here that many of us have been on, and following that guidance and everything. Assisting, I think at first the firm didn't think that we would probably have a lot of small business concerned clients, but as more and more of this program went on, it impacted a lot of our clients as well. And I've been helping with forgiveness and then helping understand the funding requirements and those type of things too to become eligible. So now we get another round and we get to have fun with that. So.
Amazing, Jared. Thanks so much for joining us. And I wouldn't be doing my job if I didn't ask you that beautiful lake in the background. Where are we looking at? Where is that?
So it's actually a pre-populated Zoom background, but it's not too far off from a lake. I live over in Spokane, Washington. I'm just kind of close to the Idaho border, and this is similar to what some of the North Idaho lakes and things look like that I like to go to.
Well, we will all be finding a bit of Zen moment from looking at that virtual background for sure today. So great to have you. Thanks so much. Brady, round us out. Welcome.
Hi there, Brady Berg. I'm a partner in Wilson Sonsini's emerging companies practice. So I'm a venture capital startup company lawyer. I've been with the firm, depending on how you count, either a year or well over a decade. I took a stint in between serving as general counsel of a cybersecurity company that was sold a couple years ago. So it's great to be back in this seat and working with companies. I again rejoined right about the time that the pandemic hit. So jumped in to help on the PPP effort for our clients. So it's been an interesting program to look at from the standpoint of the entrepreneur and venture-backed companies.
And I think the words "never a dull day" probably live for sure
Never a
in
dull
this
day.
program
Yeah.
in one way, shape, or form. So we've got a lot to cover, but before we do that, our amazing panel does like to make sure that we're answering to the best of our ability with understanding of who is joining us here today. So if you'll indulge, I promise we're really getting close to getting those insights out. But I got a couple more quick polls that I'm going to launch just to get us a better sense as to who is here. So the first thing is, and it's a poll asking you, compared to 2020, are you more optimistic now about small business recovery in 2021? So it's a very simple yes/no poll that I'm going to launch when I actually find my button here, which I'm always bad about doing, guys. Give me with just 1 second. There we go. So compared to last year, more optimistic or less? Just give me a quick announcement on that, and then I'm going to pop to the next one. We'll give it just a moment to let as many of our people complete as possible. And again, welcome. Delighted to have everyone with us. As you're filling this in, know that we're going to be open to Q&A as much as possible throughout today. So pop those questions into the Q&A function that you'll see at the end. Yes, we are definitely stealing more optimistic team that is joining me. So I'll share those results. About 69% to 31% feeling more optimistic, which is great. Next poll that I'm going to be popping up is basically asking really quickly, as the pandemic has forced a lot of our small businesses to shift to online and digital platforms, where are you investing most of your efforts right now? Okay, so given everything that you could be spending your time, the one thing that none of us can change is the number of hours in a day. Where are you actually shifting your investment on your time right now? What are you investing around that? Really great responses coming in. Thank you so much for all of you participating. No digital upgrade is actually winning here, panelists, about 35%, but coming in close is a platform for customer transactions, which certainly makes sense, as a lot of people have had to shift into really figuring out how do we get those revenue dollars flowing in. Obviously, that is allowing us to see that. So let me share those results really quickly. And one last poll. Thank you so much for all of you participating. This is the last one before we get into the insights for today. And this is basically asking, did you dramatically shift your business strategy in 2020? In other words, did you sell different products? Did you go to different customers? Did you reimagine your distribution differently in order to stay in business? So if you can just give us a sense of, yes, I pivoted to stay in business. No, I'm staying the course, sticking it out. We're going to hold in there and make it through. That would be incredibly helpful as our panelists get ready today to provide as many insights as they possibly can to answer these questions that are facing you right now in thinking about this next wave of stimulus coming through the PPP program. So I'll go ahead and end that poll. No, about 65% have definitely been staying the course. At a team, at a go. And we've had about 35% of you that have understandably needed to pivot to stay in business. So let me share those results really quickly. Thank you for your time and attention to those numerous polls. Really, really appreciate it. And now let's get to the course of action. So I'm going to open it up to basically ask Jared to kick things off, if you will. Here it is, 2021. I can't really say Happy New Year anymore since we're a couple of weeks into it, but it is a new year, and there definitely are a lot of new options, certainly around this program. Maybe you can walk us through a high level of what do we have to expect with this current program and this current package coming into place.
Sure, thanks, Nicola. And I'll probably give a high-level overview here and then turn over to Roxanne to go into some of the programs a little bit more in depth. But there are some more options in 2021 here that Congress did approve on December 27th, $284.5 billion of additional funding for the PPP. It was in that part of the whole overall $900 billion COVID-19 relief bill, which most of you are probably seeing in the news or headlines. I'm not sure how you could have probably missed those things at this point, but maybe you did. There was also with that, when I say certain, options available, there's certain amounts that were set aside for community and small depository type institutions. And most of those were done to allow for more direct assistance to minority and underrepresented and smaller businesses this time around. So they were a little more keen, Congress was, on trying to make sure that those funds do get to some of those smallest business concerns. And they also did institute some appropriated funding specific for businesses with 10 employees or less as well, to make sure that they were covered. And then there's three types of loans now. You have your first draw, which is kind of a continuation of what the program was before for anyone who hasn't drawn a PPP loan yet. You have a second draw. So if you took a previous PPP loan, there's some different eligibility requirements this time around, but you would have a second draw loan possibly. There's also some modifications to your existing PPP loan amount. So if you haven't gotten forgiveness or those things, then you would also be able to expand your first draw. And I think Roxanne is going to dive into each of those. But a couple of other things too that I think is with anything with PPP, the more times they try and simplify it, it seemingly makes it more complicated, just more rules and things to follow. So which is why we're here today. But I think for the more complicated aspect, like I mentioned, there are some new eligibility requirements for first and second draw loans, and also some expanded exceptions for eligible businesses. So, for instance, museums, live venues, churches, they're all eligible as well. You got news organizations can apply on a per location basis, similar to what restaurants and hotels did before. And you still have this continuation, by the way, of restaurants and hotels with those exceptions under NAICS 72 codes. Then you also have an expansion of 501c6 organizations. So that's going to be a lot of like your state societies, your chambers of commerce, like those type of things. But there are some stipulations with those too around, 15% or less of your receipts have to be from lobbying, or less than 15% of your receipts have to be from lobbying, and some other requirements like that. And there are just a few different nuances too with the number of employees by those types. So one thing too with the second draw loan that they did reduce the overall employee threshold from 500 to 300 to be eligible for that. Again, trying to focus a little bit more tighter into those small business concerns. They did completely preclude public companies and those type of entities from applying. And one of the other interesting factors too that I think a lot of folks were hoping for out there, but with now the expanded expenditures, some non-payroll expenditures for PPP that are eligible. So things like personal protective equipment is now eligible as a cost that you can use the funds for. Suppliers that are essential at the time that you had to purchase those items for your operations and those type of things just to run your business. And also some certain things for software, cloud computing, those type of those that you need sales and billing functions, those normal everyday expenditures that we just need to have as a small business to operate, right? So a lot of those are now eligible as well. And those are actually retroactive to first draw loans and second draw loans. And one thing I want to touch on too, that as I'm covering the overview here, there was actually some great tax relief. I think a lot of people were hoping for the expenditures to be deductible that were covered by PPP loans. So that was achieved as well. That applies to 2020 and the additional loans that will come out here in 2021, which I believe actually opened today. So Roxanne, you can maybe touch on the process for that. But we also got new guidance this morning and last Friday on how to calculate those first and second draw loans, which is great. The other big tax matter is with the employee retention credit. Previously under the first round of PPP, if you took a PPP loan, you were not eligible for the employee retention credit. So it's kind of, you take either or type approach. Now those borrowers, so if you took a PPP loan, you're actually eligible for ERC as long as you don't use the same payroll expenditures for the ERC. So you can't double up on those and take a credit and the PPP loan for the same cost. The program also retroactive the ERC back to March 13th, 2020. So you can go back and look into last year and take advantage of that ERC even if you took a PPP loan last year. And they've actually extended the eligibility and availability of the ERC through June 30th of 2021. And just a few other things I'd maybe mention on that, why it's beneficial for folks. As they increase the rate from 50 to 70% of qualified wages, which can be substantial for companies. And instead of $10,000 a year of eligible wages, it's now $10,000 a quarter. So pretty significant there as well. And they reduced the year-over-year gross receipts decline that's part of the eligibility requirements from 50% to 20%. So it should hopefully increase the eligibility for a lot of businesses for that. As with anything, and as what we're doing today, I'd make sure that you consult with your tax advisors and other accountants and legal counsel and folks with that. And of course, Roxanne, your banking colleagues and things that as you're looking at this program to make sure that you're covering off on all your bases. And the one last thing I'd maybe mention is that today's session, I think was mentioned, but we are focusing today on the funding and what's out there now is new options for the PPP program. We will not cover forgiveness, but that will be covered in the subsequent webinar that we'll be having. But just to quickly touch on that, there was some expanded simplification for forgiveness for those under 150,000 that's now in effect. There's basically a one-page certification that borrowers will submit to their lenders on the employees that were retained, how they use the funds, et cetera. So more of that is expected, I think, by the SBA. I saw by January 20th. We'll probably have that either today or tomorrow for that. So hopefully we'll be covering a lot more of that for you soon.
Fantastic, Jared. Thank you so much. Great oversights and perspectives on just the program update at large. Obviously, as you perfectly mentioned, we have a lot of people here joining thinking about, well, how do I get this application in? How do I actually get ready to prepare for this new wave of funding? So Roxanne, let me turn it over to you and invite you to sort of walk us through your insights and perspectives on how we're going to be successful at doing that this time around.
Yes, thank you. The first thing I want to say is that the SBA is provided substantially more thorough guidance this time around. We have, they put up on their website Friday, and then again, and this morning, a first draw, how do I calculate my first draw loan? And then this morning they put up, how do I calculate my loan amount for my second draw loan? And how do I calculate the 25% reduction, and what documentation do I need for both calculating my loan amount and calculating that 25% reduction. I think I would tell all of you, look at that document. What's beautiful about it is it breaks it out by entity type. So if you're sole prop, no employees, it gives you very specific information, including what line on your tax return to look at, right, to calculate your loan amount. And they have included everything from nonprofits to farmers to religious organizations. So please check out those two documents first before you apply, because it will help you. And the reason why it will help you is because SBA has raised the bar, if you will, for good faith review on the lenders. And while we still may rely on the certifications that you make in your application, we have to do a better job of reviewing the documents before submitting to SBA. And that is a little different shift from the original round, where lenders had very little guidance when it opened up. So it was kind of a free-for-all a little bit for a while there. So I will tell you, this time, you're going to see Bank of the West, you will also see other financial institutions, just requiring more specific documentation. So just throwing spaghetti against the wall this time is not going to work. So that's my biggest piece of advice, is look at those documents. as Jared said, the first draw PPP loan is really very similar to the last one. It's a maximum 10 million, and 500 employees is still the size standard. And with the exception of eliminating certain types of business like publicly traded companies, it is the same loan program. The second draw program is where you have the newer eligibility. You have a smaller size standard, 300 employees. And by the way, just to throw in, the number of employees is based on employees located in the US, as well as if you are a foreign-owned entity, employees located in the rest of the world. So you need to remember, for size standard, it's employees in the US and the rest of the world. For payroll, it's only employees located in the United States, right? And then the 25% reduction, really what you're doing here is you're looking at a quarter, a snapshot in time. Let's say the fourth quarter of 2019, October to December would be a quarter, a 3-month period, and you would compare that to December. And you have the right to choose which quarter is the best and most beneficial for you to review. Some of you have seasonal sales, so you may want to compare a quarter where, again, you really can see the impact of your sales based upon your peak season. And then the second thing is that you have a 2 million maximum loan amount, and it's still based on 2.5 times your average monthly payroll. And except for if you're in the industry code 72, then it's 3.5 times. So again, hardest hit businesses got a little bit extra bump this time around. And I think that's kind of a general summary of the program for right now. And then when we get into Q&A, we can answer more specific questions.
That's a fantastic overview, Roxanne. Thank you so much. And a lot of great tips and strategies included in there. Well, speaking of good tips and strategies, one of the mantras at the center is to try to avoid headaches whenever possible. And I think no more justice around PPP, and the word headache has come up historically. So Brady, help us try to avoid that going forward. What are some of the pitfalls and what is some of the tips that you might offer our entrepreneurs joining us today on thinking through avoiding those kind of issues coming up in this next wave of funding availability?
Well, my first tip is kind of a half joke. If you want to avoid a headache, I think is don't take a PPP loan. And I say it's a half joke in all seriousness, because again, I'm coming from the perspective, working, being a partner at Wilson Sonsini, representing venture-backed companies. And this is a big umbrella program, right? That is intended to provide a lifeline for sole proprietors and restaurants and a whole host of businesses. So I think everybody's looking at it through their lens, but for venture-backed companies in particular, entrepreneurs, it's a tricky program, and I'll explain why. And I think you have to carefully weigh whether this is a program that you absolutely need to take the benefit of it, or whether you can find help in other ways that might be more suitable for your business. But so I really have 3 things to focus on in our limited time. I'd say first, just to echo what Roxanne said, is know the rules, and I'd add don't bend them. And I think this is in the first phase of the program. It absolutely was a free for all. I mean, this was never has a program of this magnitude been rushed out as quickly as it was, and there was a lot of confusion, as you would expect there would be, to be fair to those who rolled the program out. They've gotten smarter about it at each phase, and there's a lot of guidance now. It's complicated because these rules are complicated, and because there are a lot of different types of businesses that this program is designed for. So but I'd say first, know the rules. Don't bend them, and that's because this isn't free money, and I've heard a lot of people come to me saying, am I breaching my fiduciary duty if I don't, try to take this free money that's out there? And it's not free, because it comes with a lot of headaches potentially attached to it. And you are providing these certifications that, if not made in good faith, come with serious penalties, potentially criminal penalties for fraud. The program has, and even in its most recent legislation, they've enhanced the hold harmless provisions for banks. So they really are shifting the burden to the borrower to make these certifications and to sort of, and therefore to understand the rules and to what they're certifying. And so if there's if the rubber is going to hit the road on enforcement in the future, it's going to come back to the borrower who made those certifications. So I think you have to make sure you've educated yourself or consulted with experts and that you're making the certifications in good faith. And to underscore that, the new legislation, in fact, includes another $50 million of appropriation for auditing and for fraud mitigation. And I think the first phase of the program, it was only 25 million. So I mean, I think they've recognized that there's a need to fund enforcement and auditing going forward. So I think there's a lot to play out there yet. You still have to certify under this loan, whether you're applying as a first-time applicant or whether you're taking a second draw loan. And this is something that I've seen some confusion about, but you still have to make the certification that current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. And this is something that a lot of businesses really wrestled with the first go around. And there's a $2 million safe harbor. So if your loan amount is less than $2 million, you're deemed to have made that certification in good faith. But it's still an ambiguous certification. And I'd say even as we look today, if you're applying today versus applying back in April and May when the first wave of applicants were really applying. Even just looking at the poll right now, right? I think we do have a better sense of maybe there's a light at the end of the tunnel. I think we're still, obviously in a difficult position, but there's a sense with the vaccine, and we know that there should be an end to this, hopefully in the near-term horizon that we can start to plan for. So I think that certification itself is even harder to make today than it was back in April of last year. And then, there's a bunch of archaic rules. This is where it gets really tricky for venture-backed companies, is that the affiliation rules, except for narrow targeted areas where they've explicitly waived the affiliation rules, that they still apply. And that means that you're making these certifications together with your affiliates, which in cases for venture-backed companies can mean your investors, even where they're not a majority-owned investor, just through simple negotiated traditional rights that investors have, where they've got blocking rights or positions on the board that can complicate things, and then bring in to these rules all of their other portfolio companies that are related, and you're not even, kind of unbeknownst to you. That's how the SBA would look at this program. So again, this is all under the heading of know the rules, educate yourself, and apply in good faith, and don't try to play tricks and bend the rules, and it's not free money. So that's tip number one for avoiding headaches. Tip number two is keep records. Again, knowing that audits are coming, keep really good records. And there's a list at the end of each loan forgiveness application. There's a long list of records that you have to submit and records that you have to maintain. But even above and beyond that, and again, particularly for venture-backed companies with a board of directors, more mature companies, I think it's important to run a good board process and to think about whether this loan truly is necessary, that, jobs would be lost. Again, it is the Paycheck Protection Program. Jobs would be lost, but for this loan, that there's no other sources of capital available, and that you've documented that internally and maintained that analysis. Again, don't forget this $2 million threshold, which is relevant for two reasons. One, it's relevant that it absolves companies who are taking loans of less than $2 million from really having to wrestle with the necessity certification, or gives them a safe harbor. But it also says that anybody who's taking a loan above $2 million is likely to get audited by the SBA, and it's just a red flag. It's a threshold. And I have not seen any guidance on this particular point, but the lack of guidance to me says that anybody who's got $2 million in PPP loans across all of the programs. So now if you take a second draw loan and that puts you above 2 million, I think you have to be wary of this threshold, and it puts you into a different category. so being ready for that audit that will come if you're above 2 million. And by the way, the SBA also reserves the right to audit if you're below 2 million, and that there are a lot of other, I think they've been busily in the background also putting together some screens that will, that will tick off an application if something's out of order. So I think you have to be prepared for these audits. And specifically, you can take a look at what, if you want to know what an audit would look like, look at the loan necessity questionnaires that are posted on the SBA website. There's one for for-profit companies called Form 3509, and another one called 3510 for not-for-profit companies, again, on the website. And they're called loan necessity questionnaires but it's really an audit questionnaire, and it's 8 to 9 pages of really detailed questions that the borrower has to answer within 10 business days of receiving this checklist. So, you got to have your records ready. You got to be ready to provide answers. And this is really just the first phase and the basis for kind of further follow-up. Again, underscores the point that you gotta know the rules, keep your records, be prepared to answer questions, and it's not free money. And then the third headache that I think, again, is particularly relevant to venture-backed companies or companies who aspire to be venture-backed, is that there are change in ownership rules that are, they're SBA rules. There's also a form of note that you're going to get from your lender, and lenders can either use their own form or adopt an SBA form. But in almost all cases, these change in ownership rules are relevant. The SBA has clarified at least that, at least from their perspective, they're only concerned about a change in ownership of 20% or more. And in those cases, if there is a change in ownership of 20% or more, and this is at any time during the life of the loans outstanding, and it's aggregated, so it can be a series of 4 or 5% changes in ownership from different issuances along the way, can trip that threshold and requires you then to provide the documents that cause that change in ownership to the lender. The lender, in many cases, for particularly kind of smaller community banks, don't even aren't familiar with venture-backed venture company documents, and aren't necessarily prepared to sort of understand what to do with them, and then have to approve these transactions. So it can slow down the timeline significantly. And then if there's a change in ownership of 50% or more, it requires SBA consent, which, by the way, the SBA is really busy just administering this program, let alone approving a venture financing transaction or a small M&A transaction. So you have to build in significant timelines to get that approval. And really what this means is they've said their approval will not be required if the loan is repaid in advance, or if the borrower has both applied for forgiveness and has set up an escrow with the lender under the control of the lender of the amount of the loan, such that if it isn't forgiven, that money is there to repay the loan right away. So it's sort of like you can take the loan, but you have to really earmark all of this money to be repaid in full in the event that you have a transaction where either the lender or the SBA or both can't meet your approval timeline. And venture-backed companies want to move really quick. And I'd also say that big institutional buyers, as a general rule, don't want to touch PPP loans. So they're going to likely insist that these loans are paid off, prior to the closing of the transaction, or that there's a very smooth and clear process to have these approved after the transaction through an escrow or something of that nature. So, and then there's a lot of notices. You have to, even if you get through these approval gates, you still have to provide notices to the SBA about the new owners and provide EIN numbers in some cases. So this is a whole nother avenue that venture-backed companies weren't thinking about. These are the types of strings that come attached to the money, and that we've had many clients who probably have in many ways regretted taking the loan because of this.
Great intel. Thank you, Brady. It seems like complexities continue to abound for sure, but we know more now than we did obviously at the start of this, and we can have a chance to sort of start thinking around corners of things like exits and liquidity options and change in ownership and elements to that. And without doubt, track, record, make sure
Yes.
you're doing all of your documentation above all else. So thanks for those good guidance. All right, now before we get to the lightning round of questions, which is always a fun part, we're going to try to cover as many as we possibly can in our time allotted today. And thank you for all of you participating. This is a great window to get in any last questions that may have been sparked by the great panelists today. But let me make sure that we don't have a chance to miss a really good tip from each of you. So let me ask, what is your parting words of wisdom, if we can do it that way, not that we're exiting yet, but what is the one tip that you want to make sure everyone walks away with? Roxanne, let's start with you, then Jared, then over to Brady.
Well, you know what I'm going to say. Read the SBA documents there at the SBA website under the Payroll Protection Program, and read those documents on how to calculate your loan amount and what documents need to provide. And the other thing is, just remember, the harder you make it on the lender, the harder it is for the lender to prove the business behind you. So I think that's the other thing you need to keep in mind, that all financial institutions, large and small, are dealing with a large number of businesses that are impacted. And the cleaner your package is, the better it is for not just for the lender, but for the business behind you.
Makes a lot of sense. Thanks, Roxanne. Jared.
Yeah, I think consistent with some of the things that Brady mentioned, there are a lot of headaches with the program. So just think carefully about, not only taking the loan itself, but how you're going to use it. I think, use hindsight at this point to what we've learned from the first program. I worked with a lot of companies that, for all the right intentions and purposes, took the money, they needed the money. But then 3 or 4 months into it, once I got the 24-week forgiveness, started realizing that, oh no, I've been paying people above thresholds I can, apply, or, I think I'm spending too much on non-eligible expenditures. I need to spend more on payroll, or vice versa. So I think, that caused a lot of headaches for them later on. And so thinking about, if I take the loan today, what are the types of expenditures and things that I really want to focus and use it for? And one of the things too is, if you're going to use it for all those different types of expenditures, just remember that you have to support all those expenditures, right? So, the more and more you can just use it for payroll, the intention of the program, and spend on that, understanding there's other aspects of the business and costs, but, cash is fungible. So maybe you can divert the proceeds in your other funds different ways. But that just means you have to support the payroll costs, not a full list of all their expenditures. So just some things I've noticed from advice that I've helped with clients and things like that to make it a little more simplified and through your complications.
Simplification, always a good thing. Thanks, Jared. Brady.
Yeah, I think mine is just sort of doing that soul searching, so to speak, of, do you really need this loan? And it goes, it's built right in there in the certification. Is this loan necessary? And I think, I've had many clients sort of answer the question for themselves, right? In going through that process, and you realize, like, geez, but I really need this loan, or we're going to have to shut down the business and fire people. Well, then there's your answer, right? That means you need it, and this is a lifeline, and that's what it's there for. But it's not there for sort of for arbitrage. It's there as a lifeline if you really need it.
Awesome. Well, speaking of lifelines, there's a lot of tactical as well as some strategic questions coming in around the successful navigation of this program. So let's try to address as many of those as we possibly can. General rules apply, so we don't all have to answer every single question. Feel free to jump in if you want to respond, and we'll kind of keep going through as many as we can in the next 17 minutes. So up first, if a person was successful in getting that first draw PPP loan with one lender, are they required to use the same lender for the next application for the second draw?
No.
No.
They just need to.
Awesome.
Yeah.
Okay.
Yeah, they just need.
Excellent.
You just need to have your SBA loan number and the from the first PPP loan and the loan amount. That's actually on the form, so it's a required piece of information. And it helps SBA match, because they're doing matching on the back end behind the scenes. So it'll help them match your loan to your first draw.
Can I ask
Perfect.
a follow up on that one? Because
Yeah, Brady, go ahead.
I was going to point to you, Roxanne, to answer it, but is it but it is more efficient, correct? If they use the same lender, I mean, I think there are some rules that are in place.
Yeah.
They don't have to re-provide documentation, or
Depends on the lender. Every lender has a different approach to this.
Yeah.
And I can just speak from Bank of the West. You will need to provide your payroll documentation, same as you did on the first round.
Got it.
And the
Okay.
reason is because there was so little guidance in the first weeks of that program.
Yeah, makes sense.
Yeah. I might add too, Brady, and maybe Roxanne, you can clarify me on this, but what I've understood and heard is that I don't think the exact same amount of lenders are going to be participating with the second draw loan. So it could be that even your lender you used the first time is not actually participating.
Yeah.
The other thing, that I heard a lot is some banks are just not accepting a lot of new customers for this because they are already at max capacity with trying to process their existing customer base. So just be mindful of that too. I think if you're looking to switch lenders, that it's actually someone that would be able to process you more efficiently, as Roxanne said.
Yeah. And just to follow on to Jared's comment, because it is actually a really good point. If your bank is not participating in the second round of PPP, you can go to there's a large number of non-bank lenders out there who are going to be active in the second draw PPP loan. There's a whole group of community development financial institutions that are doing PPP loans. So just keep that in mind. If your bank is not participating in the second round or first, the first round again, just please remember there are a number of non-financial and non-depository institutions that are available to take loans.
Fantastic. Great insights and a really important question for sure that we got clarity on. So thanks for taking the time to answer that one. Yeah,
Nicola,
sorry,
I might add a couple of things just on that while we're kind of on the vein. So it kind of getting in the reiterative part of this process. But, one is if I recall correctly, the application deadline is March 31st for folks. So there's a little time, that's when the program closes. And we have received quite a few questions on this vein on am I eligible to apply for a second loan if I still have not gotten the first loan forgiven, et cetera. So just a couple of things. If you do have to have used or will use the full amount of the first loan by the time you go to get the second loan dispersed, and it has to be all on eligible expenses too. So that first loan needs to be spent on eligible expenses. So why I think that's important in the conversation we're just having is if you're crossing over banks or using different ones, it may create some complication if that other bank hasn't forgiven your first loan. Right. So just kind of think about that as well if you're looking to do that.
Awesome. Thank you. All right. So questions coming in, and again, I think we've hit this, but let's just make sure we slow down to speed up. Calculating the average monthly costs. Should they calculate the 2.5 times average monthly cost based on 2019 or 2020 costs at this stage, or does it matter?
It's at the borrower's election.
Perfect.
In fact, they can even use a third category, which is the 12 months prior to the loan, which isn't necessarily the calendar year. For readability, they've written the rules to say 2019 or 2020, which I think in most cases will be what people will use.
And just keep in mind, you can run the numbers yourself. If you had a bigger payroll in 2019, by all means, use your 2019 payroll.
Yeah. Really good reminder there. Thank you. Speaking of reminders, a specific couple of questions coming in on the hospitality industries, which obviously, like many industries, have definitely been affected here. How do they figure out if they qualify for the 3.5 times payroll amount for hospitality industries? Any specific words of wisdom there?
Their industry code, when you got, this isn't particularly important for the first round. If you were in a industry code that started with, this is the NAICS code, and it's a national North American industry code.
Classification.
And classification. And you had to have that, in your first round application. And so if you were in that industry code 70, starting with 72, which is, really your accommodations and food industries, restaurant industry, that's what you have to match. The other thing that I was on a call and this question came up is that, well, can I change my industry code? I'm going to tell you this: if you weren't in the 72 industry code on your first loan, SBA is not letting us change that industry code for the second loan. Okay. So that's how you're being matched, is by that industry code. And if
Got
you're
it.
not
Got
sure,
it.
it's
Yeah,
on your tax return a lot of times too.
another good tip. Thank you, Roxanne.
And that's also the industry
So
classification code you're supposed to use for for qualification for the 500 person test and size of business test. You're supposed to use that same NAICS code. So you shouldn't mix and match NAICS codes for different purposes. Be consistent.
be consistent. Perfect. Thanks, Brady. Now, speaking of consistency, is that 150K easy forgiveness cap for both the first and second draw combined, or is it for each one separately?
Each loan.
Each loan. Okay, perfect. Can a business owner claim income replacement for themselves?
Yes, this is my favorite subject because it's complicated. And we
Okay.
saw a lot of errors on the first round, and we're seeing it again on the second round. Remember this, the Paycheck Protection Program is about pay. And so as a business owner, if you're a self-employed person, your pay is not your revenue. Your pay is your net income after expenses. So on your Schedule C, that would be line 31. That number divided by 12, capped at 100,000 times 2.5 is how you calculate that. If that number is small, it could mean that you have a $900 PPP loan. If that number is negative, you're not going to be eligible for it. And what I tell people is, if you are, in a position where you need additional funding, you need to go check out the disaster loan program, not the EIDL advance, but the EIDL term loan, because that loan covers your expenses. So Paycheck Protection covers your net income, which is the part you retain. The EIDL disaster loan is what can cover expenses. So you haven't gone down that path yet. You might want to look at that. State of California also has a program similar, disaster program type similar, that they are using to cover expenses for really small companies, self-employed.
Awesome. And staying with that just for a moment, if I can, Roxanne, some questions coming in worrying about, will that affect their eligibility if they do qualify for some of those other programs? Is there any correlation to worry about there?
No, not on this, not this time.
I think the only thing to maybe watch for there, we've had it a couple times, and similar to what I mentioned for the ERC, is making sure that you're not doubling up any of the funding or anything for the cost. So, I think I've had a couple of healthcare entities reach out to me about healthcare provider relief funding, some of the costs associated with that, just to make sure you're not also taking PPP for that and doubling up, basically.
And there are some targeted rules, right? I mean, I think you're not allowed to take the Protect Our Venues Act grants, right, as well as a PPP
Correct.
loan. And there's some specified rules on not double, that wouldn't make you eligible for PPP if you've taken other funds.
Got it. Okay, perfect. So this was alluded to earlier, but questions around the timing for the approval process. Obviously going through a little bit of extra checks and balances. Is there any kind of assumptive stance yet around how much longer we're talking about before actually knowing if a business is going to be successfully admitted into this next wave of available funding?
Well, I'll speak to that as a lender. I'll just start with, it depends on your financial institution and their capacity, and how many applications they have in their queue. And I would say this applies to community development financial institutions as well as the largest institutions in the country. But what I can tell you, once we have a completed application and submit it to SBA is doing an actual review on their side, not of the documents, but of the data, because they need to make sure that tax identification numbers match PPP first draws, that kind of thing. The other thing that they're doing is they're doing some additional fraud screening on their side as well to help reduce the fraud in the program. And they're giving us, a 24 to 48 hour return of that loan number. And again, every institution is different, but the regulations say that once the SBA has given the lender an approval and a loan number, the lender has 10 days to fund that loan. And that assumes that you signed your note in a timely fashion. And if you don't sign your note in a timely fashion, then the lender is obligated to cancel the approval with SBA within 20 days. And that is a fairness issue because the money is not unlimited, right? So
Yeah.
if you don't take your money in a timely fashion, somebody else will.
Yeah, everybody has to commit to making sure we're doing our part on
Correct.
that
Yeah.
part of the process for sure, Roxanne. Really good, really great. So some of the questions that have been coming in are a little specific now that we find ourselves, as I say, in this very long winter. Landlords are obviously at this stage saying, hey, we can't not collect rent forevermore. And a lot of our businesses are now finding a pressing need to be able to catch up on some of those arrears payments. Are they allowed to use the capital that is provided in PPP to catch up on past owed rent? Is that allowed?
Well, I can answer that. Yes, the rent is one of the eligible uses of loan proceeds. Just, I think, Jared, you mentioned this earlier. You got to keep in mind that you can't get forgiven unless you spend 60% of either of your PPP loans. If you get two, you have to spend 60% on payroll. It's really expected to replace payroll costs. And then if your payroll costs are being funded by the loan, hopefully that will provide available working capital to pay your rent. So, but the key thing is, yes, but you have to spend 60% on payroll to get forgiven. And I don't know if you want to add anything, Jared.
Yeah, and maybe just add a couple of things when it comes to rent that's come up quite a bit is, I think some folks out there, when they got it, they tried to prepay rent or do some other things. It is rent due in the normal course that you would have on a monthly basis. So just be cognizant of that. And there is a specific requirement on when the agreement was in place. So you had to have it in place prior to February 15th of 2020, the date of disaster declaration. That doesn't preclude you, though, if you were to have it amended or renewed. Some of the agreements just has to be continuation of the previous agreement you had, not a completely new one. So just be kind of cognizant of those specific facts.
Oh, one more thing, and you said this earlier, Jared, is that you have to verify those expenses when you get to forgiveness. So to verify that lease was in place on February 15th, 2020, you're going to need to give a copy of that lease. So I think that's also another reminder on those non-payroll expenses. You need to have the documents to substantiate that you made the payment and that you had an obligation to make it.
Mm-hmm. One thing I might add too, that with the first round of program, we had an 8 or a 24 week, right? That was really the covered periods. So they did need to occur, and then unless it was accrued and paid in the immediate payment following. With the new set of loans, though, they did come out and clarify some of that as well to say that, I think people are in this trap. Well, what if I ran out of money in week 13, right? And so now if you ran out of money in week 13, that is basically your covered period. So it's just got to be within that window. And so they did come out and help kind of, I don't know if that narrowed it per se for folks or made it harder, but they are basically saying that 13 week is your covered period. That's where you're in the money.
Yeah, you can now pick between 8 and 24 weeks at whatever works for the borrower, right? So it's meant to provide more flexibility. I think there was a lot of confusion about the covered period, which was amended in the first phase, along the way. So yeah, I think hopefully these rules will be simpler.
Well, speaking of what we hope are simpler rules, dotting I's and crossing T's, a couple of questions coming in around the methods of accounting practice. So the SBA is stating that they need to use GAAP method of accounting. Is accrual accepted though? And if so, what's the burden of proof for using an accrual method of accounting to prove the 25% reduction?
The financial statement that you provide. Okay, and again, this document that came out this morning is very specific. It gives you 3 examples. But the key thing is that if you provide a quarterly financial statement and you report your income on an accrual basis of accounting, that would be how you calculate your gross revenues using that methodology. If you're a cash basis of accounting, and that's how you file your tax returns, you would use your cash, cash basis. Either one is acceptable. The key thing is that you don't want to do one period accrual and one period cash, or do a tax return 1 year accrual and a financial statement cash. Do you see what I'm saying? You just got to keep it straight.
Same.
Mhm.
Got it. Brady, this might be a good question for you. Startups that were legally established in 2019 and we're planning on hopefully launching in 2020 in March, but obviously then the world changed that order of availability and we're pre-revenue. Are they able to apply for PPP?
It had to be in existence. It had to be formed by February of 2020, February 15, I believe, if
15.
I'm not 15th. All right, good memory. The there is no revenue requirement for the first draw PPP loan. So I'd have to distinguish on that question whether they're talking about a second draw PPP loan. So I'm assuming the question is whether they're eligible as a first-time borrower if they're asking that question. The second draw loans would assume again that you've already received the loan, you've used the funds. There is a revenue requirement for the second draw loans because you have to be able to show that there was a 25% reduction quarter-over-quarter, between 2019 and 2020. So I'm assuming that question is about the first draw loan, but there is no revenue requirement.
Excellent. Good classification on that. Thank you. All right, I've got time for one last question, and it's an important one. And obviously, we've been down this road before a little bit. PPP has run out of funds in the first round of PPP. Do we expect that with this third round of PPP that we are likely to see a challenge with availability of funds? So in other words, do people need to hurry to try to get those applications in?
We'll probably all answer that one, but I would say that there was a frenzy. There was a frenzy in the first one, and again, I think this kind of goes to the uncertainty of the times, right? If we rewind the clock back to what the world looked like in March and April of last year, truly unknown, right? And there was a real rush to the door on this program. They did a second allocation or second appropriation of PPP funds, which by that time, I think people were, the rules were becoming more clear. People were realizing, that there are categories of companies where this isn't really a great fit, and that there were some of these additional strings that come attached. And the second appropriation expired with a lot of, like $100+ billion on the table that wasn't claimed. So this new appropriation now covers both second draw and new first draw and expansions of the first draw. So it could be, and it's been a long time, and we're realizing we're not out of the woods yet, maybe another year. So it could be that this is fully subscribed, but I'm not seeing near the frenzy we saw in the first time, and I would be surprised if we run out of money for this program. That's my take.
Yeah, I think, I've talked to a lot of different clients and helped quite a few, and I'd say I'm probably less than 20% of the clients I've assisted at this point are willing to go back for a second draw. There's a lot of factors involved with that. I think one of them is some businesses have actually seen some improvement, or consistency in their business, or been able to adapt a little bit. For the most part, what I'm seeing is restaurants and hotels that are still hit very hard, those in the travel industry, those things. So I think it is, as we've been advising this whole call, be very conscious of what you're doing, making sure that you do need the money with all the stipulations and headaches that can come with it. But certainly if you're eligible and you need it, it's there. I'd go for it.
Yeah, and the only thing I would add to that is SBA has come out in their press release and said that they expect there to be sufficient funds to cover. And I think the reason why there is that, the last day to authorize a loan is March 31st. And so, the other thing is that if it appears like there's going to be a problem, that doesn't mean that Congress can't go back and, and take another look at this. But I just talking to colleagues and the comments from SBA itself is that they expect that this is enough money and enough time frame to access those funds.
Amazing. Well, Roxanne, Jared, Brady, thank you so much. And thank you to all of you who joined us today. Our panelists provided so many great insights, but it's a complex discussion. We know we didn't get to every question that was burning today. We promise we will continue to address issues, whether it's around forgiveness. So stay tuned for more from us there. And if this was at all helpful, we have one ask for you as well. If you'll take just a moment to give us your feedback, this will not only help us make sure that the next session we put forward contains all the content and perspectives that you need, but equally we'll make sure that we're addressing anything else that may be top of mind for you right now. So please do, as a gift for us, take a moment to complete that survey that you'll see in the chat box here. Again, thank you so much for joining us. We have some great upcoming programs. Look for support through mentorship. As I say, it's all available to you. And we really appreciate all that you're doing for us in this very difficult time. Thank you, and stay tuned for more. Bye-bye.
Right, bye.
Thank you. Bye.